Let's have on stage the co-founder of Now Money, Dillon. A big round of applause for Ian.
Hi guys. I don't think I've been described as godly before, so pretty happy with that intro. So today I obviously have a slightly different perspective on the financial world than a lot of others that will be speaking here from banks and card schemes and that sort of place, because I, with my co-founder and our team, have actually started a digital banking product here, a fintech startup. And for all of the talk of fintech and all the things it's going to do, in this region there are actually quite few of us. So hopefully this perspective might be interesting, a little bit different. So as I said, I've already given myself a bit of an intro, but I worked in banking before. I worked for HSBC in the UK, Europe, and in the US. I came to the UAE about 5 years ago to start Now Money. My co-founder, Catherine, was a data scientist here working for banks already. So she had a good insight into the market. We both had a really clear idea of what we wanted to do, because we'd seen the challenger banks from the UK, the likes of Monzo, Starling, and also Revolut, and how much customers love them. They're products that customers absolutely love. They don't need to go to branches. They don't get put on, long waiting lists when they try and call up the call center. So it's a very user-friendly product. But it's hard to make money from them. Because what tends to happen is people keep their existing bank account and then just use the fintech product for one specific purpose, which is great, but makes it hard to make money out of it, because the bank is left with the deposits and any lending. So therefore, they're the ones making the lion's share of the money. So what we really loved about this market, and I and Catherine both had experience in banking here, is that there was a huge unbanked population. And this unbanked population sent remittances back to their families each month. So we're talking about, Indian labourers, Pakistani taxi drivers, Filipino nannies, etc. So this gave us an opportunity to provide them with a product that hopefully they loved and was needed because they're unbanked, and also be able to make money out of it because they sent a remittance home each month, so we could share in some of the revenue of that. So really what we wanted to do was sort of have a profitable business, but with a social element to it as well. So, as I said at the start, what I'm looking at here in this session is the positive impact that fintech can have for customers and actually for banks, which sounds perverse because most people assume that I am a sort of die-hard competitor of the banks, but actually it's not the case at all. And what I'm focusing on is the Middle East and Africa. Now, in the West, we all know that there are lots of very valuable fintech unicorns. There's 60 globally. Lots of names we already know. Stripe, Revolut, Ripple are three of the big ones. Klarna, and there's lots more. So, but this is a market. The West is a market where everyone has a bank account already. The banks, they're not perfect, but they're pretty good. So, it seems really strange that there are 60 fintech unicorns globally, but in the Middle East and Africa, there are zero. There's not a single fintech unicorn here. M-Pesa is a very well-known company, but that's owned by a bigger company. It's not a sort of standalone entity. But there are zero here. There are none. And here we've got 500 million people unbanked. We've got banks which are, with the greatest respect to them, not as advanced as ones in the West and the East. So the opportunity is massive, but we've got no fintech unicorns. The opportunity, though, is enormous. I don't think anyone needs me to tell them that. But I think the thing that really can happen in the Middle East and Africa is, with the large unbanked population, we have fintechs that have actually leapt whole generation of evolution. So in the West, people first of all had bank accounts in branches. They then got transitioned onto mobile banking and internet banking from these banks. They then started getting accounts with TransferWise, Revolut, Monzo, whoever. So there's sort of a progression of that population going from unbanked to banked to using fintech products. And those fintech products all mesh with a consumer's existing bank. Now, what we've seen in Africa especially, and to a certain extent here as well, is that fintech solutions have sort of broken that mold and have completely leapt the banking sector. So people are going from unbanked, cash in hand, often in rural locations, to using fintech products as their primary way of accessing the financial system. And this is exactly what we've seen in Kenya with M-Pesa. Now, M-Pesa now processes over 50% of Kenya's GDP. The effects on individuals, on consumers, have been enormous. They estimate that rural workers now earn between 5 and 30% more purely for having M-Pesa, nothing else. So the effect of this is enormous. The population in Africa, 1.2 billion people. Middle East, 411 billion. So combined, we're looking at upwards of 1.5 billion people here. The Middle East, I've spoken about Africa and looked at M-Pesa, looked at Kenya, etc. The Middle East actually has got almost as big a proportion of unbanked population as a lot of African countries. And, we look around ourselves and we think, oh yeah, we all have bank accounts, we all have access to good financial products. But actually, if you look at the Middle East as a whole, in the UAE, it's estimated that 4 million people are unbanked. And that's all of the sort of low-income workers, the migrants that are sort of fall below the radar a bit. They're not a target for the banks, they're not a target for the statisticians with the government or whatever. They sort of get a bit forgotten. So the population's here. We've got a massive population, there's no problems with that. Now the problem we have here, banks aren't the only problem, but banks are, I have experience of trying to start a fintech startup here. Banks, frankly, are the problem. Banks are the things that every fintech company needs. Okay, so Now Money, for example, what we do is we offer a MasterCard payment card, so thank you to MasterCard, and we offer a smartphone app that allows them to manage their finances and send remittances home directly from the app. But we can't do that without a bank. So we have a bank that sits behind us, and we have one pooled account with that bank in the name of Now Money, and it's Now Money who subdivide that balance out to all of our low-income workers. So even though Now Money sort of provides a service that the banks won't, we still need a bank to do that. And that is no different to basically every single fintech company in the world. I see some eye-watering valuations of companies in the UK like TransferWise, Currency Cloud, and they're based purely on Barclays infrastructure. So, if Barclays were to pull the plug tomorrow, then what happens? So we are all incredibly beholden to banks. We can't operate without them. We're not actually competitors to them in the sense that we need them. So that's why they're also the solution. The problem here, the reason why banks are the problem is because they've been slow to understand the opportunity that working with fintech brings, understand that actually fintech companies, and the previous presentation really brought this home a lot, was that fintech companies often are very good at bringing customers and servicing customers very well. Now, banks that sit behind those fintech companies can therefore benefit from the liquidity that the deposits held bring, or the transaction flow, or lending, or whatever it is, without having to focus on the KYC, the customer acquisition of each and every customer, which is a very expensive and laborious process, and frankly something that banks aren't particularly good at, which is exactly where MasterCard's opportunity was in the previous session. So actually, there's a huge opportunity here for banks. And we've seen it. I mean, the flow of transactions we're putting through exchange houses and banks from Now Money, without those banks or exchange houses having to do a thing other than integrate with us, is huge. So I think the fintech industry often gets pulled into really demonizing banks and saying banks are terrible. And my previous slide did say banks are the problem, so I can't say too much. But I actually think we need to work with banks, and the banking sector is getting there. It's been slow, but it's starting to get there and understand the opportunities that fintech companies bring. Now, there's a reason that we are we're arguably the only or one of two independent challenger banking models in this region. And the reason for that is you need so many things to work to be able to launch. So this is a relatively famous diagram that's created by KPMG, which shows all of the things that need to be there to be able to have success as a fintech firm in the middle here. So you need capital. Capital in the Middle East. Sounds, and this surprises a lot of people in that you think there'll be loads, raising money here will be really easy. Now, raising money here would be easy if you were, going to run an oil services firm or a real estate firm in London. But if you're trying to do something like this, a technology play, people don't understand it. And I don't blame them for not investing in it. If you don't understand it and it's very new, it is very scary, and people don't invest in it. So that's been difficult, although, again, that's getting a lot better very quickly. The one thing the Middle East is very good at is once they, realize there's an opportunity and want to modernize, they do so very quickly. So that's getting much, much better. So that's there now. Talent. I don't think it needs me to tell you that finding good people here is really hard. And especially people who've got experience running technology platforms, fintech companies, they don't really exist because fintech companies haven't really existed until now. So, that's always a difficult thing. Demand. Now, demand's the one thing we've got, okay? We're good for demand. I spoke earlier about the large population in the Middle East and Africa. Middle Eastern customers, we have about 98% smartphone penetration in the UAE. People love using technology. They like convenience. We've got demand. We're good for that. And policy. And this is another part of things which is incredibly important. If we can't get the regulatory licenses, if we can't get the support from the governments and the regulators, it's incredibly hard to launch it. But these are all, from my point of view, from someone who needs all of these and accesses all of these daily and works with stakeholders in each of these departments daily, these are coming together and it is getting much, much better. And the opportunities for everyone to benefit from it are huge. So I think really we've got to keep going with this. I think there's a temptation with banks, regulators, governments, and even the fintech firms themselves to get a little bit of success, launch a new fund, or launch a program to try and partner with fintechs, and then not follow through with it. And fintech isn't a PR exercise. It isn't something to shout about and then not do anything about. It needs an incredible amount of hard work and concerted effort for years and years and years and years and years to get going. It took Now Money 4.5 years to launch from when my co-founder and I started working on it full time. And that was a combination of getting regulators to sign off on what we needed to do, which half involved sort of creating new licensing. We needed to get banks over the line. We needed to forge a partnership with MasterCard to issue cards where we had no traction or anything to go off. So, these things are all very difficult. So it takes a long time. But in terms of the opportunity, the people that benefit the most are customers. An example I always like to use is Kareem here. Before Kareem came here, taxi drivers, you always had to pay cash. You know, if you gave them a large note that they needed to break, they really did not like that, and they would be quite happy to tell you. You know, the standard, the cleanliness inside the car left a bit to be desired. Now, Kareem came along. They allowed you to pay by card. They allowed you to book by the app. It always ended up going to exactly where you needed it to go. The drivers were always polite because they wanted 5 stars. They were always, you know, clean. They provided water in taxis, all this lot. And if you look at how the local taxis have moved on ever since that, it's out of sight compared to where we were 5 years ago. And that's an example of how innovation and innovative technology companies don't just benefit themselves, but they actually drag other companies along with them and improve the standard for customers. And customers are always the benefit. Now, the beautiful thing about fintech in my eyes is that fintech really doesn't discriminate. And the one thing that fintech has always done is it has provided access to things that used to only be accessible to people of a certain wealth, and it's opened that up to everyone. And with the cost and the low cost and the easy accessibility of reaching people via technology, that's something that we're really seeing now. So yeah, customers are the beneficiaries. Now, I've kind of ruined my own slide here because I told you this before, but yeah. It's not only in terms of the convenience, there's actually a hard benefit. Getting people into the financial system, giving them access to make instant payments, giving them access to credit, increases the wealth and the prosperity of those individuals, you know, beyond imagination. As I said, rural household incomes in Kenya have increased up to 30% as a result just of having M-Pesa. And M-Pesa started off as, you know, as a simple way to send money from one device to another using an SMS platform. It's now so much more. You know, merchant shops are all on it. You can get credit through it. There's savings products. You know, it's really becoming a banking product in itself. The other thing that people are scared of, especially people in banks, is that fintech's going to take their jobs. And it is, okay? It is going to take your current job. That job of processing, often manual documents or whatever it is, those jobs go. But they're replaced with higher skilled jobs. They're replaced by people working on ways to better service customers, to work out what customers really want, to smooth the flow behind the scenes that makes the product better. I mean, fintech companies didn't really exist. You know, the sort of modern startup style fintech company didn't really exist in London even 10 years ago, certainly 15 years ago. It now employs 60,000. And they're just the ones that are directly employed by fintech companies. Those that sort of are employed as an offshoot, I don't know what it is, but I'd imagine it's an awful lot. So I think this is another opportunity. It's the short term is scary. Okay, banks are making cutbacks left, right, and centre, but actually there is opportunity for individuals to upskill themselves and go into more value-add roles, rather than just look at the short term of potentially their role becoming redundant. Now, the other thing I love about fintech solutions is that banks can focus on what they're good at. As I said, I'm not here to bash the banks. I think the banks, how banks do all the things they do, I do not know. I don't know how one organisation can cater for low-income staff who just want to take cash out of an ATM, and also cater for, you know, ultra-high net worth individuals, how they can cater for corporates that want to borrow $100 million, and also an SME that just wants an account to be able to put cash in at the end of the day. I mean, how they've managed to do that, I don't know. And that's only something that's happened in relatively recent times. If you look back historically, banks really just provided deposits, lending, and transactions to wealthy traders and individuals. So what fintech really allows, if it's embraced properly and people understand the opportunities, it allows banks to go back to doing what they're good at. Banks can hold deposits and they can lend. They can support transactions. Running around after individual customers, doing marketing schemes and all the clever things that fintech firms do to try and get the customer's attention, frankly, banks are not that good at that, nor do they need to be, because they can sit behind and take a large amount of the economic value doing what they're good at, providing the infrastructure that lets companies like Now Money, TransferWise, Revolut, even MasterCard to an extent, letting them do that and letting them thrive based on the infrastructure that they have. And I think we're going to see some very, very, very successful and valuable banks cropping up in the next few years who focus on providing infrastructure for fintech firms to work off. So there's a shameless here image of Now Money account. Change is here. It's here now. Fintech, it's been a lot of PR in the last few years. There's been not much momentum and actual change on the ground, but it's here now. We've got there. We've got to that tipping point where it's here to stay. Consumers also are now used to accessing fintech products. They want to access fintech products. They don't want to go to branches. They don't want to fill in pieces of paper. So it's here now. So we've got to embrace it. It benefits consumers enormously. It can benefit banks. It can benefit individuals. We mustn't be scared of it. We must embrace it. Because the opportunities really for everyone that does embrace it are enormous. That's all I've got. So if any of you have got any questions, I'm happy to take them or find me afterwards. Yep.